Good morning, good afternoon, good evening, and welcome to the Thursday, the 3rd of February Bull versus Bear webinar with Steve Miley on the call for TradeDay.com. So welcome everyone. We're going to go through our normal run through here today. Calendar, what we've had, what we've got coming up, both the economic macro calendar plus the micro calendar, earnings calendar, which has certainly impacted markets over the last 12 hours, 24 hours in here. We'll take a look at some of the articles from the major news from the major news wires, the headlines that are grabbing markets, what's impacting markets right now, and then we'll take a look at some charts and how that's flowing through those macroeconomic data events, those fundamental geopolitical events, and earnings events are flowing through into the actual markets and where the opportunities lie. Let's kick off with the calendar. We've been flagging today as a big day in here. We've got the Bank of England and the ECB, the European Central Bank, both in play today. And we did have some service sector PMI data. PMI data kind of been overshadowed by the central bank price action in here, and also by the earnings price action from last night. But let's focus on what we've had and what we've got coming up. And first of all, so Bank of England in here unanimously voted 9-0 to increase rates as fully expected. What wasn't expected actually, though, was that there was a 5-4 vote with a minority of only 4, so nearly a majority, of wanting to actually raise interest rates by 50 basis points or 0.5% to 0.75. So they moved them from 0.25 up to 0.50, but with a very close call on it nearly being up 50 basis points, 0.5%, which was not expected. So certainly a more hawkish tone underpins that report, given that it's very likely now that in the next meeting in March here, they're talking about it here on the Forex Live. I'll share this in the chat again. If you're watching live, guys, do encourage you, if you're watching on a recording, to come in and watch live, because you can ask questions, and I'm sharing the links as well in the chat that you can then go to these links. So so the market in here certainly now anticipating a March rate hike now, particularly if inflationary pressures keep up, and that's seen the pound rally against both the dollar and the euro in here since that announcement, with this more hawkish tone being positive for the pound, with higher interest rates anticipated. Also, if you look in here on the inflation, actually the inflation projections are actually fairly positive in here, in that previously they were looking at an inflation peak of 6% in April, but now they're looking for an inflation peak at 7.25. Well, that's not positive. But if we look further out in 1 year's time, previously expected at 3.40, now 5.21. That's not great. But then the 2-year time and 3-year time numbers are actually lower. So longer term inflationary pressures are not as big a concern, but short term they are a concern. So obviously that's going to mean that there's a risk of a more aggressive hawkish tone and action from the Bank of England going forward, and hence the strength that we've seen in the pound on the back of that. So that's obviously clearly kind of a negative for global risk assets in here, with one of the central banks in play in here, of the major central banks. The Fed obviously already have made their move in here. Are ready to make their move in here. And we're also seeing in here the anticipation of further rate hikes, with the Bank of England, remember, already raising rates at the end of last year. This is the second move higher from the Bank of England. So Bank of England is certainly getting ahead of the curve. And then the other piece of news that we had out of the UK as well is, where am I in here? Maybe I'll close it down. But we had announcements in here. Okay, look, spiraling inflation is the real concern. And Bank of England, Reichs hates as 4 officials vote for even a bigger increase. So these covering the same news in here. I'll share all those articles into the chat as well. So you can read here. I may have closed the tab in here, but the other piece of news really to hit this morning was that the Ombudsman, the body looking at electricity and energy prices in here, has allowed for a significant push higher. I'll see if I can dig that article out. I think it may have closed it in here. This was the precursor. I'll talk about this one. This is looking at Facebook and then also ECB, but we'll come back to that. I can't see the article right here. Let me see if I can just go and quickly try and get it back out from Reuters in here. But basically the where are we in here? Morning bid. No, it's not in there. I think it's under the European markets in here. No, they're not talking. I think it's buried in here, but basically, the ombudsman, the regulator in the UK, has given the green light to higher energy prices, which is seeing them. I think a historic rise in energy prices is going to kick in April, and there's potential for Rishi Sunak, the Chancellor of the Exchequer in here, from to actually maybe give some help to those who are going to struggle to meet those big hikes in energy prices that are going to come through. So yeah, all about the Bank of England so far. We do have now Governor Bailey. They talk about it here. So watch BOE if you want to take the link in here. You can. The press conference is going on now, so that's just started. It's started the same time as we started here. If you want to go and listen to that, but just to get see if there's any more colour from Bank of England Governor Bailey, who is speaking at the press conference right now. ECB now all in focus. So we have the ECB going back to the main calendar in here. We have the ECB. The decision is about to come up at 12:45 UK time, at 1:45. So we're about to get that decision whilst we're going to be on the call in here. No change expected. It's all going to be really around the press conference in here. So, and the monetary policy statement. So we will be keeping an eye on that. I'm probably not going to have the chance to react. I'll try to react to that as it comes out. But maybe we won't get the chance really to react to that because I'm going to have to be reading and digesting and as we go. But if that comes out and I can find something decent to talk about, we'll talk about that. But it might be all in the press conference. But there is a real threat in here now with the inflation data that we saw, the record inflation data for the Eurozone as a whole coming in at its highest level in here just this week. There is risk that we see the ECB. So in here, the articles are talking about that. So ECB on hold, but may acknowledge inflation risks. So obviously, with that big inflation number, there is a chance that. And again, in here, this article's talking about it in here potentially for this article in here potentially ECB to sound more hawkish. So probably going to be very similar to what we've had. I'm sharing all these articles in the chat. So if you are watching live, please do say hello into the chat if you want. And if you've got any questions, please do feel free to ask them. So 5 things to start your day was talking about. We'll come back to tech earnings, but central banks. We've already had obviously the Bank of England, ECB in here. Inflation concerns from Turkey this time in here. Prices rising nearly 50% on the annual rises through January. So real spiraling inflation there. And we had the big sell-off late yesterday. So it was a strong session right up to the close in here yesterday. And then the market got smashed after the close in here, driven by Facebook/Meta. So after reporting their first ever stagnation of user growth in here, on its Facebook social network and giving a disappointing sales forecast. So and shares in Meta fell 20% in post and pre-market, so post-market/pre-market trading yesterday, and put all the other major tech shares under pressure. So the Nasdaq got hit. So this was after the close, after the bell yesterday. It was a fairly strong close, but then the market got significantly hit on the downside after the close. The broader market, because of the reports from Meta, having had a really strong performance the day before when we had the really strong Google results. So if I just go to the earnings calendar now, actually just take a look. ECB, pretty much what we got for the we do get the ISMs. We get market data at 9:45. Excuse me, 9:45 Eastern time, 8:45 Central, and that's 2:45 in the UK. But we also get the more important ISM non-manufacturing PMI data. That comes at 10 o'clock Eastern, 9 o'clock Central. That's 3 p.m. London, UK. So watching out for that data. That's the main focus on the data front. But we're going to be, obviously, ECB, as I say, is due out in the next 5-6 minutes, and see if they do take that more hawkish step. Another central bank potentially about to take a more hawkish step. Not going to move interest rates, almost certainly not going to move interest rates, but it's going to be in the tone. The tone might come through the statement, more likely to come through the press conference, which we don't get then if you see the press conferences in here, and not for another 50 minutes. So that's not till on 8:30 Central, 7:30 Eastern, and then 1:30 p.m. UK and 2:30 Eastern European time. So yeah, that's what we got for this afternoon. Certainly going to be important. Going back to the earnings, although so just quick flip back to yesterday. In here, there's Meta. So the actual numbers weren't too bad. It was just more the growth and the forward guidance was really the big concern. So the revenue numbers are okay. A dip in the EPS, that was disappointing. But as I say, Meta got smashed 20% after the close. If we go into today, another biggie, Amazon. It's going to be really interesting. Again, after the bell, it's going to be really interesting to see what Amazon delivers this evening. So this afternoon, this evening. So watching out for that. That's most of what I got in here on the macro fundamental side. Let's take a look at the chart. So, although we had this very negative candlestick in the end, this is the S&P 500 on the daily chart. It was, so that's a shooting star pattern, shooting star candlestick, can signal a reversal, and obviously lower again here this morning. That was after the bell. On the bell, we were actually right up at the high. So this was a big green candlestick. It was similar to the one from the day before, from Wednesday. We had a strong from Tuesday, we had a strong Marabuzo candlestick in here on Wednesday, and then that sell-off was after the bell, and then lower again in here today, and breaking the uptrend line. So if we go in, if I step in now to the 1 hour chart, you can say if we put the trend line that comes up from this basing, so this is that erratic basing pattern, remember we looked at, if we look at the trend line that comes up through here, and then we extend that out, and you can see we reversed the trend line. And there, the market was already reversing the trend line actually. So there's the sell-off in here late yesterday in here, and then the market again lower. So the market dipped and rebounded, having broke the trend line. So it was already breaking this trend line, and then accelerated on the close. So this is the close yesterday. After the close yesterday, accelerated lower with the metadata, and then rolling. And now you can see we've only just dipped lower and then trying to bounce in here. For me, I think this is still okay. I think you got this impulsive move higher. Excuse me. This is the Google numbers. So this is the Google numbers from a couple of days ago, I think. So this is from from the beginning of the week. So this is from Tuesday. So these are the so the market impulsively higher in here. Okay, then we went higher and then we dipped and we're holding above that. So impulsive move. Now the low on that Google number, I think it was a Google number on Tuesday, right? From the first. Let's go back and double check first. Go to this week. Alphabet, there you go, Tuesday. So Google number. So if we go back to the chart though, so there's the Google, and that came from, if you look where it come from in here, and we could zoom in a little bit and actually look exactly where it came from, going all the way into a 15-minute chart, and there it is there. So there's the Google data. So that came in here, and that's where it started. So the market rallied from 45.07 and a quarter. Now you can see we're above that, significantly above that, and we're trying to turn. I think this is turning. I think the risk is now back higher. I think this is the Facebook sell-off. This is the Meta sell-off here. Okay, and then we did cut down through this low, so that's disappointing. There's the trend line. You can see the trend line. So it's disappointing. It's a short-term topping pattern, but that could be done. Now, I'm not saying buy it right here, right now. I mean, ideally, you'd want to wait to above the overnight high. So the overnight high there, 45.44, that's some way off. You might put in on the little counter trend line. So you got the little counter trend line runs through here. I just grab that. You got this little down counter trend line. This is on the 15-minute chart. And we'll expand that out. We'll save that default, apply. Oh, so I didn't save as default, apply. Okay, so look, you can see it's flirting with this little down counter trend line right now. Okay, and if we put this one on that runs through here and here, we're already through, I think. So if we go and take a look at the longer one, this is from the top. Okay, you can see we're already through on that one. Okay, so we're through on that one. This looks like it's turning to me. It's basically, and you've got a really easy stop. If you want to buy it maybe above, you see these little swing highs. I'm going to step in even one step further and go into like a 5-minute now. You've got these little swing highs on the 5-minute here, and here, right? And the market's failed there. I would almost go above these peaks here. These peaks in here. So that peak there is 45.32 and 3/4, a break above there. And then you've got a real simple stop down here below the low, right? Okay. So even though it looks all very negative from the big, on that chart, it's still looking kind of potential shooting star. The market's dipped, but we have rebounded. And I think I'd slightly prefer to play this one from the long side. Okay, Facebook is important, Meta is important. Okay, but 20% down on the stock in one day on one forward guidance. I know it's disappointing. I know it's big picture. It's the first time they've reported whatever they've reported in here. But then this doesn't look to me too negative, and I would be looking to maybe buy into it. I think the recovery effort, the recovery effort we've seen in here so far this week has been phenomenal. This is a strong basing pattern, and the market was looking for an excuse to probably maybe dip back lower. We've got the Bank of England behind us now. As we speak, the ECB are announcing, so that's breaking news. Let's go and take a look on Forex Live, and I'll open up, see if we've got the breaking on Forex Live as it comes through. So unchanged monetary policy meeting as expected. Let's see if they've got actually any more colour on that, as that's just come out this second. Let's see if they've actually analysed the statement yet, because the statement would have been released, but no, statement details to follow. Okay, that we'll come back to. We'll revisit. We'll come back to Justin, who's covering it on Forex Live. We'll come back to that shortly. But let's go back to the charts for now. So yeah, I think that's a buy opportunity. I think it's the same for the Nasdaq. So if we go to the Nasdaq in here on the daily, you can see more of a negative pattern. Really, it's not a shooting star, but I mean a complete capitulation on the downside. But look, we're holding above. There's the low from that's the Google day, right? And if we go in and step in to the hourly chart, so where's the Google rally? Well, the Google rally comes from actually here. Where are we? It's here. That's the low on the Google day. Okay. And there's the Google rally. So actually below the Google rally low in here. So if we step in like we did before, I'll go to like 15 now. So there's Google. That's Google there. So we're actually below the low of the Google, but we're not below the low of the day of Google from earlier on in that day. So that low down there, and we're holding that low, and look, again, trying to swing, just trying to swing. You've got two trend lines in here. So whilst above that low there, that spike low is on NASDAQ. We are 14,729 and a quarter. Whilst above there, you can see, look, we've held it once, rebounded, failed, held it. She held it, you could argue, held it 1, 2, 3 times in here. This is on the 15-minute chart. You almost argue 1, 2, 3, 4. There's multiple times in there. Remember, this is through the Asian session, though. And then even this morning, though, as we're going into pre-open in here, late European morning, going, early morning in the US, the market's holding, dipped down, held that low, dipped down, held that low. You've got a number of little counter trend lines. You've got the one that comes off the top in here from this week's high through here. Okay, so that's some way off. But if you get above this peak here, and you see you've got these other peaks in here, so in the market, that's the metadata coming out, and then the market holds and rebounds to in here. So that's around the same kind of level where we've rebounded to here. So the highs here, 14,870. You've got the highs here, 14,885. Okay. So that area is going to be important, okay, in there. But you've also got then, so you've got this more, if we go through this more accelerated trend line, we're down up through that. But if you go through the really small overnight, so this is the only on the overnight though. So, but look, if we break above here, and again, it's the more recent highs, you could be really aggressive and buy through the little recent highs. 14,807, got the high there, 14,806. Yeah, so above 14,810, opens up the upside. You maybe go for this little high here. That's at 14, basically 850, and then you've got the actual swing high up there, 14,870, and then these recovery highs here, 14,885. Okay, so you've got various trigger points, and obviously the stop really ideally back across this low over here. So this is from the 1st of February. This is the low of the month, okay, which was the Google day, and there's the Google rally there. Okay, so for me again, waiting for the tournament, the easier place to, the easier trade to, rather than being short in here. I'm not saying if it breaks this low over here, if it starts to break below the current lows, if it breaks this low over here, I'm not advocating being short. Being long. You go short then. So it's a binary trade really. You're long above this level and you're short below. For me though, breaking above this little counter trend line could be a very cheap way to get in. Buy through there, stop below here, and then your target could be getting back a lot of that meta sell-off. I'm not saying you're going to get it all back, but you could easily be up here into like 15,000 again on Nasdaq today. So that's looking strong again. Let's have a quick nod to the where are we? To the oil market and then to gold. So oil retracing lower through OPEC plus in here, market dipping lower, but holding above supports in here from the recent lows. It's kind of sideways. I'm still a buyer on dips in here. Go to the 1 hour chart. You can see another new high dipping lower. Yes, we dipped below this low, but we're holding above this low in here and rebounding again. So holding above that low there, which was 85.91, I believe, as I remember from my analysis. Oh, so that's 86.55. This one over here is 85.91. 86.20. in here, but holding above these lows nevertheless. Okay, so and looking like potential for a rebound in here for oil and gold. For me, still kind of somewhat indecisive, but if anything, the tone has shifted slightly more positive with the rally we saw yesterday, but rolling back lower. I've got no strong feelings really about gold in here still. Okay, everyone, let's have a quick look, see if we've got anything on the statement. See there's an update in here on forex line. No, so still got these views unchanged. We're waiting for something from the statement. Nothing on there from the statement. I wouldn't have thought anything's come through on Reuters yet. No, nothing in here yet. The one thing I might go and take a look at in here. Let's just quickly look at. So I've got a. So I'll go to actually. Let's see if we've got it on the. If we go here, and we go back to. I'm going to get the echo if I go back to the main room. I'm going to have to go there. You're going to hear the echo of me on the webinar. I'll go to the trading room. If that's, but I'll try and quickly scroll. If we go here, let me mute myself. I'm going to echo if I go back to the. Okay. So press release, no, nothing really in here. So there is the press release in here, so you can take a look at the press release, but no analysis. Press release on the PEP in here. I'm not going to be able to read through this and analyze it for you guys, so we'll come back to that one and digest that tomorrow. Yeah. All right, I'm going to wrap out there, guys. Stay safe out there. I'll be back with you on Friday for a TGI Friday pre non-farm payroll and US employment report webinar, bull versus bear webinar. Until then, have a great one. Take care, stay safe, and have a great trading day. Bye, guys.